Today is the calmest day you're going to get this week in the markets. Here's why. Oil dropped $6 a barrel and is trading in the mid-80s. Why? Because there's a 48-hour pause in ceasefire on Middle East tensions with the U.S. and Iran. And that's helping the markets catch your breath a little bit. When oil drops, the market usually reacts upward. That's good news for the Federal Reserve. On Wednesday, they're having a press conference and increases the odds of a Fed rate hold, not a hike. So that's good news. Investors were worried that a hike would happen if tensions were high and oil was trading where it was. So that increases and pretty much almost guarantees a rate hold. So that's good news. But then we also have a lot of catalysts this week. You know, also on Wednesday, Fed Chair Kevin Warsh is kind of flying blind because the PCE report comes out the next day. So you're kind of guessing what's going to happen. So there's a little risk to that, but I think he's going to use the 3.7% CPI inflation as a key metric, but ultimately I think they're going to hold. There's earnings reports, there's Amazon, there's Microsoft, there's Facebook, all coming out this week. Jobless claims, there's so much going on this week. In earnings reports, it's the ultimate picture of what's going to happen right now. You know, as I said, for the Middle East tensions, don't trust the rhetoric. Don't trust the press conferences. Look at the actual data and what's going on in the Strait of Hormuz. If oil tankers are flowing through, because that's where companies are putting their money where their mouth is, with insurance premiums and stuff like that. Trust that. And the same thing goes for earnings reports. Don't trust if a company says they're committed to AI. Trust if they're actually investing in their CapEx for AI commitments. Trust what the numbers actually say, because they're putting their money where their mouth is. So it's the same kind of situation analysis, which is why I ultimately think these earnings reports from the big tech companies, hyperscalers later this week, is a more important indicator of where this market's going to go than than even oil and the Middle East tensions. But obviously investors, as I said in my previous video late last week, that the prior week the market sold off pretty hard because investors want to see, they don't want to see from Google and Tesla that negative cash flow. Yes, you're investing on it. They don't want to see any negative cash flow. They want to see tangible profit, tangible returns. And investors are starting to get a little bit impatient about that and understood, is this industrial build out going to be worth it? I ultimately think yes, but time will tell. But everything this week, in my opinion, is going to be more important. What are the investment and CapEx guides for the earnings reports for the big tech companies? That'll dictate the next direction of the market, in my opinion.